So good morning. Good morning. You can share good morning on the chat so that I can see you're ready to learn. Okay, Jay, karaoke. Okay, good morning. I can see some good mornings. Thank you so much. Karibuni sana. You can share the webinar, and also you can share the codes and tell everybody that we are live, and as we take this interesting topic together. So it's a cold morning. So as usual, I always ask a question before we start. Is it your first time to come? Is it your first time to join our webinars? If it is your first time, you can type a yes. So I'm doing this for 2 minutes so that we can allow a few more people to join us. So if this is your first time, you can tell me a yes. I would love to see. Hawa says yes. Oh, I can see Steve. I can see some yeses. Oh, Mohammed. Karibuni sana for you who this is your first time. Karibuni sana. You can follow us on our social media, Facebook, LinkedIn. And when you do, when we have this training, you can always come in and learn. We host about 3 webinars in a month. The first one, which we did last week on Friday, we host, okay, someone says there is an echo. So the first one we did was last week on Friday. So last week we do tax trends. So that is the time we discuss emerging issues. We discuss latest issues. We discuss finance bill, e-teams, whatever is new. There were so many changes on iTax. So I explained that on Friday. On Wednesday this week, we did a sector-based training. And the sector was wholesalers and retailers and distributors. So the people that in that sector, you were able to learn on Wednesday. Then today we are going to have this topic, managing tax audits, and I'm going to explain the reason why that I thought that it was important for us to have this. So you can register on our social medias and you're able to learn. So if you're able to hear me properly, you can say a yes. And as you say, oh, I can hear you well, you can also tell me where you're watching the webinar from. Is also important. My co-host can share the link. Kindly share the link or the passcode on the chat so that somebody can share. You can share to a friend. It's a very interesting topic. From now to December, KRA does a lot of audits, company audits. So this is something very interesting for you, so that you can be able to learn and mitigate and be able to plan yourself properly. And in case you get that audit, you know what to do at what time. So it's a very interesting topic today. So thank you, Anthony says from Nairobi CBD. I can hear you from Juja. Thank you, Jane. Thank you so much. So I think with that, let's start on our topic. My co-host kindly share the links. and the codes on the chat so that we can share. I believe we are live on Facebook or we on YouTube. And later you can actually go ahead and watch the YouTube recording. So today we are talking about managing tax audits, and I've said that KRA does a lot of, they'll be doing a lot of, audits this period. So it is very, very important for you to understand this. So just a minute. Kindly share the webinar. Let me get something. You can share what is your expectation, or have you been audited before? What was your experience? I would love to hear what was your experience with the interaction with KRA officials or the surveillance, the revenue service assistant officers who are moving around. Have they ever entered your premises or your office, and what was their interaction with you? What did you feel? So you can talk to me on the chat as I try to share. I'd love to hear the experience. So it's always a very interesting experience to be able to see them and to talk with them, and especially where you have to provide books and so many meetings. And sometimes they can come to your office and settle there and actually conduct the audit in your offices. So at what time do we get to that level? We are also going to understand what are the tax triggers. So a company should be audited within 5 years. But what are some of those triggers that can make this process, can trigger them to come? Also, because some companies always experience so many audits. So what is the factors that bring about that audit? Why is KRA always wanting to audit your company? So if they audit this year, next year they want to audit the other year, they don't give you space to actually work, and you feel like it's getting too much. So what happens for them to be able to be always checking? Okay. Okay, Rachel says we are currently at the audit, not how sure it will go. Karibu sana. I'm very sure that you're going to get some very good insights on how to go about the whole process. We were audited twice, and it was very uncomfortable experience. Would want to go through it again. We would never want to. So that is Nasibo. It's always a very tough, sorted on tribunal. I'm also going to talk about tribunal. At what level do that audit graduates to the tribunal level? So I also talk about tax disputes, so that when they give you that demand of 100 million, 50 million, and you can't bear, so what are the other avenues can you go so that you can get a hearing? Yes, started the audit. Let me read the final one as we start off. Yes, started the audit from last year, but we have not concluded. Stays for months without talking. We don't have the results to date. What should what is the time frame for audit? I'll talk about it. Expecting one on Tuesday next week. Had one in October 20. They got back to us. Notice July 24. Only give us 1 week to reply, which is too short. Reply correctly. I'll talk about that. How do you extend time, and how do you handle especially when you're given 7 days, there's a demand, there's pressure. I'll talk about that. The revenue service officers were quite polite. That is very good, Evans. But they wrote the charges on a paper headed criminal offense. So when they come to the office and they check and see that you're not able to comply, they will give you that offense. It's an offense document, and you're supposed to respond. I also talk about that. What's an audit, kindly? Faith, I'm going to explain that in a minute. Let's start learning. So it's a very interesting topic, because for me, this is what we do on a daily basis. We represent clients to KRA on different audit tax issues. So we start at the audit level, to the tribunal, to the ADRs. So I'll explain the entire process. And for you who has this problem, we can also talk about it. So I will talk about tax compliance, tax triggers. What are those things that you can do and they can trigger an audit? I'll talk about tax audits. Now, this is a point where you get that letter, that email of audit. What happens, the entire audit process, and of course, tax dispute and resolution. How do you resolve that issue? So let's talk about tax compliance and the need for your organization to be tax compliant. Tax compliance means that the taxpayer's decision to comply with tax laws and regulations by paying taxes timely and accurately. And there are so many ways of you being able to comply. First, you're filing correctly. You're doing the audit very well. You're doing the payments. You understand the tax obligations that you're supposed to be having. You have the right systems. You have e-teams, and you have everything aligned for you to be tax compliant. The importance for your company to be tax compliant is first, access to capital. If you want to go to a bank and ask for a loan, the first thing they want to see if you're tax compliant. They improve business operations. You know that feeling that nobody can knock on our door and ask for 100 million, 50 million, 20 million, 5 million that you don't have on taxes. If you feel that your organization is not compliant, there's always that fear that what will happen in case they knock on our doors. So when that fear is not there, you are able to operate very, very well. It enhances growth, tendering, mergers. So if you want to grow, if you want to tender, if you want an investor, they're always looking for organizations that are compliant. And of course, the biggest importance is operating your business with peace of mind. I think as a business owner, one of the greatest areas that can give you stress is a tax issue. So when you're able to handle them, you're able to operate at peace of mind. What are some types of audits? And someone asked, what is audit? What is tax audit? In particular, today we are talking about tax audit. And I'm going to explain that. I will explain the triggers, and I'll also explain how do you win an audit? How do you win an audit? How do you win that tax demand? They gave you 10 million to pay. How do you do reduction of that money to bare minimum or even to zero? So I'll talk about that because the reason is on your books. So I'll talk about books required for audit and also how to do bookkeeping, because that is where we start. Then why is KRA always on my company? So someone will ask, why, like my friend there who says that I've been audited, now they are back. Why are they always looking at your books and at your company? The key areas is that you're visible. visibility. And visibility comes in especially turnovers, especially the biggest is turnover. So if you find, if your company, if your organization is doing very huge turnovers, you are in the medium taxpayers office or large taxpayers office, you find that those companies are audited regularly. So KRA will come audit you for a year, possibly until 2022, and then they will just stay for 2023, 2024 they will come, and then they'll tell you, we want to audit 1 year for 2023, since we audited until 2022. So for your organization that wants to grow in turnovers, in visibility, you have to put your books in order, because that is one of the biggest reasons why they want to audit your company. And the biggest reason is if they are having targets, and KRA works on targets, they are having targets this year to collect how much? Through the finance, we said finance bill rejects. So they were supposed to collect 2.9 trillion. So every department, every station works on a target. So if they are working on a target and they're supposed to collect 100 million possibly that month, they will look at organizations where if they go in and audit, they can come out with that 100 million without going to other people. So that is the reason why you find some of companies are really monitored, because they have the turnover, they have the monies that KRA is looking for. Sometimes you find if they would look for that 100 million to Mama Mbogas, it will take 1 million of them and so many other issues. So visibility is key. So if your organization is growing in size, growing in branches, growing in social media, growing in turnovers, then it is very important to put your books in order, because you're going to attract audit very, very soon. So what are some types of audit? And when we talk about tax audit, this is what we mean. We, as the organization already, you have an auditor, and you can ask me a question on the chat. Someone will answer you, and of course, I'll get time to answer you. So when we talk about audit, we did audits. You have an auditor, and you did your books. And after doing your books, the auditor filed returns. So KRA is supposed to come and verify that audit that was done by your auditor and verify the taxes that were paid, if they are correct amounts. Were there understatements of sales? Were there taxes that are not supposed to be paid? Were you able to file correctly? So they want to come back and audit your books. And a company should be audited within 5 years. Should be audited within 5 years. So, but also, of course, they can come because of some triggers. I will talk about the triggers. So what are the types of audit? The first one is the place of audit. This is the desktop audit. This is where KRA will sit down, look at your iTax portal, and be able to see that there are gaps and be able to audit you according to the information that you have provided. Remember, the audits that we do, the filing that we do, they are self-assessment. So that when you do your VAT, you have sat down and filed those VATs, meaning that you did them with the correct mind. If the auditor filed, you also went through the audit and the auditor filed. So that information that is provided to KRA acts as triggers. So if they want to understand about your company, they have the recording that you have provided. So there is a recording that you yourself have provided as a company. There is a recording of your customers. When you provide your customer with that eTIMS invoice, they also declare they bought from you. So there is the customer information and also supply information. When you are supplied with something, you also give out your PIN. So the iTax portal has a lot of information about your organization that can be used to audit you. Remember, there is withholding certificates if you withheld. There are so many data within the system that can be used to audit your name, to audit your company. So that is the desktop audit. Field audits. This is where KRA requests for physical records. So they can ask for physical records, they can ask for electronic records like sales ledger, purchases ledger, general ledgers, bank statements. So I will further explain on that. And most of the other one is the mixture of the two, which is the most used. So the moment they look at the iTax portal and they come up with issues that they want to discuss, they ask you for physical documentation, or you send the documents in soft, and then you're audited out of that. So the depth of audit, compliance audit, this is mostly on returns. When we file our return, like now we have filed, most of our company have filed in June. KRA comes back to want to audit that return. So they are looking for the correct amount. Did you overstatement? Did you understate? What was it? So, and the first thing that I talk about audit is that and I will talk about the audit trigger when we'll be talking the trigger, is that the audits that we do have to be done by somebody who understands tax. So we also miss on that. So is your auditor able to understand the tax? Because the first section where you get audits is through your return. So the person who is filing the monthly return, whether it's VAT, pay, NITA, housing levy, do they understand the information they are giving? Because that information is trigger. Then the auditor, do they understand the relation of the monthly returns to the end of year return, because they are correlated? The VAT that we do every single month comes to the sales that we are doing at the end of the year. So does the auditor understand tax? Because if they don't, the information they are going to input there will act as triggers. So the first compliance is on the returns that we file. The normal audits, this is deeper review, might take a longer period, could be the 5 years that they are talking about, and they want to check on everything, on bank statement, on the physical recordings. In depth, this is largely a mix, very thorough, and of course we have investigation. So investigation, there is an investigation unit within KRA that can investigate your organization on tax avoidance and evasions. So they can come on most of the time. The investigation unit will work on imports, on exports, on different areas, and it is very thorough. Under investigation, the organization can be investigated from inception. The compliance audit are restricted to 5 years, but investigation can go all the way. If the company has been in operation for 10 years, they can do an investigation since the company was commenced. So they can be able to request and open the documents and open the systems since the organization was formed, and look for those evasions. So we have the 3 main stages when it comes to audit, when it comes to the tax audits. So we have the pre-audit. This is a request of the information. I saw someone saying that they have requested for information and they are giving us very few days. So that is the pre-audit stage, where KRA sends you the intention to audit. This could be an email, could be, these days we are not doing letters. So it's an email. If you're not able to respond to an email, they give you a call. And if you're not able to receive the call, they can also check the auditor on the iTax portal. They can check the details of your auditor or the tax agent who filed, and they can call them. So they'll make sure that you get the information to you that your organization is being audited. The audit period, this is understanding the business, actual review, clarification. So the audit This is first where they do opening meeting. They can ask information about the organization. When were you registered? When were you formed? Who are the directors? How many employees do you have? What is the core business of what is the core activity of the business? So knowing the business. So that is where they start from, now checking the books to checking the software that you're using. They can ask you for data, trial balances, general ledger, sales ledgers, and they can do the review. So now the whole entire audit is at that particular level. And this one can take very long, depending on the people that you're working on and depending on the information that you have. The bad side with the audit doesn't have clarification of time period. The time period comes at the objection level, the tribunal, the ADR, those ones, they have time limitation, but audit doesn't have. So it depends on how you're able to give information, how you're able to work it through. So for us, because this is our main area, we help the client go through the process, and we make sure that we are able to close within the shortest time possible. We have the post-audit. This is a preliminary findings, clarifications, and assessments. So this is the point where they give you the findings after the audit. If you don't feel comfortable and they're asking you for so a lot of taxes, you can provide further information, further documentation. And after you provide further information, they can do, you can review the findings afresh before they do the assessment. Of course, they can do assessment and you're not comfortable with it, we'll talk about the next processes. So we had the pre-audit. This is where you understand the business. So that one I had explained. And when they are doing audit, they can do audit in their office where you provide the information. They can also come to your business where they can sit there and request for the information they are looking for. Most of the time, by the time they are coming, it will also depend on the nature of the business and on the magnitude of work. Sometimes if they ask you for invoices, there are so many. Sometimes even the data that you're sending them, if they ask you for a sales ledger, it is not even fitting the email that you're sharing. So depending, mostly I see them wanting to come see in the company, especially when the company is a large company at the medium level or at the large taxpayer's office, so that they will request. We also have a system audit. I felt it was important to mention that. System audit, this is where KRA can come and want to audit your accounting software or your ERP at site or at your workplace. So they will come and audit the server. So that is done by system auditors. So there are system auditors at KRA level. And this mostly I see it happen to people who have huge turnovers. So most of the time they will come, they will just check the servers and get the information they are looking for. So depending, and that one also happens when there's an investigation. So depending on the nature of the business, they can do that. So what are some of these books that are required for audit? What are some of these books that are required for audit that you should be able to keep them today if you want to handle tax issues? Remember, I said before that for you to win that tax audit, the biggest portion for winning is your bookkeeping. It is how you've been able to maintain your accounting system, how you have your recording kept properly, everything. So if I go to a company and I find that they are able to keep their books very well, then I know that this is a case that you can be able to handle and successfully close. And as I talk about this book, most of this, our organization, I said you're supposed to be audited within 5 years. Most of our organization, we start keeping correct books at year 3, year 4, year 5. When the organization has taken off, now the business is running very well. That is the time that we are able to start doing the correct bookkeeping. But remember, KRA will always come on the year that you're able to be more visible. You find now you've been able to do 10 million a year turnovers. That is a point where they are coming to ask you that they want to audit you. And the moment they come in, they will not ask you for that year, that 2023. They will ask you for the past 5 years. Even the periods that you are not able to keep your books correctly, they will be looking at that. So sometimes I find them that when they come and they ask for those 5 years, the consumption years are the years that have so many tax issues. And those are the years that first of all, those are the years that the organization made losses, because you're trying to set up and trying to figure out if you're ready to do this business, is the business scalable, looking for customers, trying to settle. Those were the years. But those are the also years that you did not put correct bookkeeping structure, so you don't have documentation. So you have losses, but you cannot demonstrate the losses. So you end up being taxed on monies that you received, and yet there were losses. So this is an encouragement that I want to do. Whatever business that you're doing, bookkeeping is extremely important. And right now, when KRA is not knocking on your door, it is very, very important to make sure that you go back and be able to just put everything together when there's no pressure. So what are these books that KRA is requesting? I said you can ask me a question on the chat. So you can ask me a question on the chat as we proceed. So they are looking for a sales ledger. And where are they looking for a sales ledger? Remember, we said that this information is okay. Sorry. So remember I said when they are coming for audit, they have done an internal investigation through the information that you have been giving them. Data intelligence, they have done that. They have looked at your audited report. They have checked all your monthly recording. If you have withholding, they have checked. They have checked data from your customers, from your suppliers. They have information about your organization already. They want to verify those information. So they want to come and see the sales ledger, because you have declared sales on your VAT report. You have declared sales on your corporation tax report. That is at the end of the year. So they have these two sales. They want to see, is it the correct sales? Was there understatement of these sales or overstated? Were they also? So they want to see those sales ledger. And that is what they are looking for. And this is one of the biggest areas that they are looking. When they are also looking at your sales and your turnover, they also want to look at your bank statements. So I guess I missed it there. They want to also look at your bank statements. So for your sales ledger, they want for your turnovers, they have the VAT records, they have the corporation tax records, they want to see the sales ledger, they want to see the bank statement. So all of this gives them the turnovers. So whichever is the highest of all, that is what they are going to use. So what do we do? Most of us, when we are selling, we don't do full declaration. So our bank statement are reading 50 million, yet what we filed is 10 million or 20 million. So there's a gap, and a big gap. And the moment they come in, that gap, they are going to charge VAT, and they also charge corporation tax. So it is very important that this is the space where I say the auditor who is filing should be able to understand tax. and understand the implications of some of those recording that we do, and be able to provide. So sometimes I would recommend, if you're having an auditor, you can also consider a tax consultant after audit who can be able to do tax advisory and also filing. So that is sales. They also want to check your purchases. And why are they interested on your purchases? Because you cannot have a huge number of purchases without sales. So this is something that mostly we have done with our previous ETR that is being sold by eTeams. That for all our purchases, we make sure that they are eTeams record, they are eTeams compliance. But when it comes to us selling, we don't sell everything on eTeams. So our purchases are so high and our sales are very low. So that is the trigger, and that is why they want to see the purchases. And of course, for purchases, if we did not sell, then those purchases are in our stocks. So everything is interconnected. So we also have the sales and the purchases invoices. After looking at the ledger, they can request for sample invoices. So they can, if you are a small company, they can ask for all the invoices. If you are a big company, they can raise a sample. And most of the time I see them raising a sample of invoices that we don't have. So I don't know how they're able to, possibly they're using AI to know the invoices that have issues. So you always find that the sample that was sent, you find that those are the invoices that had so many issues. So general ledgers, the general ledgers are, they want to see the expenses. So remember, when you're doing the audited report, you declare the expenses. So this is fuel, it is fuel, it is rent, labor. They want to see those, and they want to see the breakdown. And out of there, they can also raise a sample of receipts that they want to see. As also, when we talk about sales ledger, okay, I'll remember what I wanted to mention. So for general ledgers, they want to see the expenses, and they can raise receipts and want to see some of them. If they find something that is too high, for instance, some of us have like repair and maintenance that is very high. Possibly you're selling what? You're selling water, but you have a repair and maintenance that is too high. They would also want to see what is that. So they will work on triggers and finding what is the issue that they can raise on your return. And of course, they want to see manual verification of the information that you're having. They also check your asset register. Remember, when you're saying that you have assets, do you own those assets? And when you own the assets, do they have a loan statement? Some of us say we have loans, yet we are using loan as a balancing figure in our balance sheet, and the loan is not there. So they want to see the loan statement. They want to see the asset register. The asset register, they want to verify ownership of the assets. So if it is a motor vehicle, for you to be able to have the fuel expense, do you own that motor vehicle? So those are some of the, I guess when I was printing, when I was doing this, there's a section where I see is missing here. But the other thing that they are looking for are bank statements. When I'll be sending these notes, I'll include that portion. Possibly my co-host, you can be able to note on that. So they have bank statement, M-Pesa statements. So when the revenue service officers, especially when they come, they are looking at the pay bill on the wall. So when they are asking you for records, they are telling you, come with the M-Pesa statement of this specific pay bill. So they want to see those M-Pesa statement for those pay bills, the bank statement, the loan statement, debtors and creditors. Why are they interested with the debtors and creditors reports? because debtors, the debtors on our balance sheet, the debtors are credit sales. So you cannot say that I'm having credit sales of 50 million or debtors 50 million, yet you sold 10 million. There's a mismatch. So there's a way KRA is able to do opening debtors, closing debtors, and then they are able to find out the debtors within the year. So when they see that within the year, they go back to the sales that you have registered. And that's why I say audit report is a huge trigger when it comes to tax. So whatever the auditor is doing has to be extremely calculated. So what debtors levels should be there? What are stock levels? Some of us, when we find that our profits are so high, we alter our closing stock. When we alter our closing stock, the closing stock is too high. The closing stock is 10 million, yet our sales is 5 million, 4 million. So, and remember, you cannot alter a closing stock, an opening stock. So if you close stock this year was 10 million, this is in iTax. Previously, possibly in the manual system, people would do that. If your closing stock was 10 million, then this year, you have to incorporate that opening stock for this year. So if you do a head count within the stock and you find that your stock is 3 million, if you now come incorporate 3 million and yet the opening was 10, there's 7 million that was sold during the year. If you find that your profits are so high and you find that you feel like you want to manipulate that stock, then that is a trigger. And they can want to see that closing stock sheets. And they can actually, for bigger organization or some of our organizations, they can come and want to see, to do ahead an actual count of the stocks. So those are some of the books. I'm going to add the rest of the books that I've talked about. I want to talk about audit trigger. I want to talk about audit triggers. And as I talk about audit trigger, I can check if you're still here with me. So let me answer just one question. What would be your argument to defend the books for the first year when launching a business? Then you make lots of expenses and making losses, yet you're not registered for VAT from the start. So a business is supposed to register for VAT when you're at 5 million turnover and above. And through the finance bill 2024, which we rejected, was changing to 8 million. But what we are talking about when it comes to first year of business, you might not have registered for VAT, but demonstrate the losses. So when you're launching, did you build an office? Did you renovate? Did you do repairs? What are the establishment costs? And do you have documentation for that? So most of our organization, we lack those documentation. So document the losses, document all those costs, and you can be able to be on the safe side. So auditing, someone is saying audit is sampling unless doing a comprehensive review in an investigation. True. But when KRA is auditing, their audit most of the time are conclusive. So if they audited 5 years, most of the time they will not go back to that 5 years. So they will make sure that they audit every single cent. So the investigation is more thorough, for sure. It's extremely thorough. And it might even involve the police, the authorities. I've done investigation even at DCI office for tax issues. So they can go to very huge levels when it comes to investigation. Basically, what is the effect of altering the closing stock on turnover, whether you reduce it or not? It's a big problem, Francis. When we alter the closing stock, the problem is you're going to alter it for year one. Most of the time we alter closing stock so that we can minimize the profit, so that we can pay less taxes, or we can even make a loss. That is why we alter closing stock. So you alter closing stock on the year one, you add 3 million. So year two, you add another 3 million. By year five, you have closing stock of 15 million. It doesn't appear from the first that is a problem, but by the time it is year five, it is a problem. So your organization, you're having a closing stock of 15 million, yet you're selling 5 million, you're selling 3 million, is always a trigger. So at one particular point, it is going to be a trigger. So that is the essence. And remember also we are having eTeams. So eTeams is doing a lot of game changer when it comes to how we are doing the stocks. So it has a stock management software, and I've mentioned this system, and I've mentioned here before. So this is with eTeams, you cannot declare purchases and you're not selling. So that is what we used to do with the previous eTeams and with the previous system. So we have all our purchases with eTeams. But when we come to selling, because we don't want to sell with VAT, we sell up 50% with VAT, 50% without. And so that at that particular point, we come and make losses, and we make very low profits because of doing that. But now the system eTeams is helping on that stock management, because you cannot declare purchases and you're not selling. And if you do that, I say what, and I'll talk about future audits. And I mentioned that future audit next year will be on how we were using the eTeams. So eTeams will affect the annual return in these forms. That the Z report per year. So you're using eTeams on a monthly basis. The Z report, annual Z report for year 2024. So for year 2024, what is a Z report for your company? It is 5 million. So that is what the auditor is supposed to do. So the auditor who is supposed to file has to check the Z report for the eTeams machine. For annual, that is annual. Then check the VAT. So that eTeams Z report per monthly basis. So for now, I imagine that we were able to do that since January. So if I come to your organization and I'm doing a tax health check, and I'm going to give you the tax health check for free. So I don't want you to take that. We're going to come to organization and do a free tax health check. When we come to your organization, we're going to look at your eTeams. So eTeams for January, it is reading, that is a Z report for January. On your eTeams machine, it is reading 3 million. When I go to the iTax portal, will I find the sales to be 3 million? When I check your sales ledger, is it 3 million? When I check the bank statement, is it 3 million? All those levels have to agree when you're doing that report. So I'll check on that. So the eTeams is supposed to give us annual sales that you have done. And that annual sales is the sales that you've done for your VAT. If you're VAT registered, if you're not VAT registered, that's okay. The Z report on the eTeams is the annual sales. And then we also check your sales ledger and you check your bank statement. So let me talk about the audit triggers. I'll continue answering your questions. So what are some of the audit triggers when it comes to pay as you earn? So this is pay. So the pay that we do, we are having salary, we are having staffs within the organization. Variances in annual account salary figure and pay return. This is one of the biggest when it comes to pay. So when the auditor filed, did they do a pay analysis? So for us, we have to do that. Did they do a paying analysis for the full year? What was the salary declared? So if the salary declared was 3 million, the auditor has to declare the 3 million without adding anything. The rest of the amount has to come as wages or other things. So that figure that was registered for the annual recording has to agree with the pay return that have been done. So that is one. Then for the casual that we have within the organization, they also act as a very huge trigger. I think I didn't put that. My co-host, you can input that point when we are sending it. The casuals, the wages that we have. Do we, when we declare their wages, do we have the correct documentation? So if the wages were 3 million, do we have the casual wages sheet in conjunction to that 3 million that we are talking about? Is the salaries, journals and ledgers agree to those amounts? So you have to make sure that everything aligns from the physical documentation, the payrolls, to the system, to what was filed. So failure to remit pay as you earn, some of us file, we don't remit. Failure to remit pay as you earn, payment on time. So some of us don't file, some of us don't pay. And there's another thing I guess I did not mention here. Some of us declare salaries at the end of the year, but we don't have the pay as you earn obligation. That's a trigger. We don't have the pay as you earn obligation. Then we have significant fluctuation of pay on a monthly basis. So sometimes this month you pay 20,000, next month you pay 15, the other month you pay 27. So what is this fluctuation? They always post as triggers. And as we also talk about payment on time, the ledger, how your ledger looks like, and this is on all, whether it is pay, VAT, when your ledger has so many amendments, payments that are not paid, they act as triggers. So make sure that your iTax portal is able to agree, or is able to, it doesn't have much issues. Don't entertain amendments. I know that we always do those amendments on the last day of filing. Remember, when you are filing for pay as you earn, we have 9 whole days. For VAT, 20 whole days. For annual return, 6 months. So you have time to do this return. Don't do it last minute. Then you do you just file a nil, then you do an amendment. Those are triggers. Higher director standard of living compared to declared salaries. So this especially happens when the KRA auditors are coming to audit the organization. So directors form also part of the employees of the organization. And if you are a director and you're saying that you're always on losses, yet the business is your core business, and that is what is giving you a livelihood, then you should do pay as you earn on your salary as a director. So when they come to audit and they find the lifestyle of the auditor vis-a-vis what is declared for the pay. So sometimes you find the directors, they just say very small amount, put their hand 1,000, but yet that is not their lifestyle. They always want to see, is the director also getting money out of the company? High salaries of senior employees compared to company directors. So also a trigger. Just how you do your payroll. Are there fluctuations? There are people who are so high, others are so low. Is also a trigger. Variances between pay remitted and staff cost in the annual audited accounts. I've mentioned that staff cost. So staff cost could be wages, pay. So those staff costs, make sure that you have proper documentation on it. So proper documentation when it comes to that. So if directors have director fees, are they have they paid taxes on the director fees? If we are having other items, offloading, unloading, anything that involves you paying somebody, make sure that you have correct documentation. Whether you're having sitting allowances, they are allowable, but correct documentation have to be provided. So those are some of the audit triggers and some of the audits around pay-as-you earn. If your organization provides their employees with so many benefits, so when you're preparing the payroll, so there are benefits, car benefit, house benefit, others bursary, others, so many benefits. Understand the taxes on those benefits, whether they are bonuses. Understand, because sometimes we find organizations, they have been issuing benefits, but they don't pay taxes. So when KRA comes, they'll charge so many taxes on those benefits with plus penalties and interest. Pay audits are centered on organization. Of course, every organization has employees. And we said if the organization does not have employees, the director is the first employee of the company. So your company has to have that obligation. Yes, I've remembered what I wanted to say. The threshold for pay is 24,000. So people who are below 24,000, they are not chargeable for pay. But because we want to demonstrate that the organization has employees, you can incorporate them in the payroll. That is very, very important. So when they come into an organization that has 10 staff, yet on the payroll, on the pay, I can see 3, yet there are 10. I would ask, where the rest 7, where are they? So if they are below the threshold, make sure that they are also, you also file. When you're doing that import from the payroll to pay as you earn return, have all the stuff there, because it will also show that you have pay, you have staff. And when you're going to declare the staff cost at the end of the year, it will match the staff cost that you're paying on a monthly basis. So that is very, very important. I said pay audits are centered on organization. When KRA is very thorough, they are centered on organization that have a lot of staff. So you find, and possibly, I will give examples, institutions that are institutions of learning. So something like a university, you find that they're having so many staff and so many allowances. So you find KRA, when they come, they find those allowances were not charged for pay as you earn or for taxes correctly. So they will charge organization like farming, which has a lot of staff. And remember, when we talk about pay as you earn and we talk about salaries, there are so many others. We have the pay, we have, right now we are having NITA, we are having housing levy, we have NHIF, NSSF. Of course, when KRA is coming, they don't concentrate on NHIF and NSSF. So those ones are done by those organizations. But now we are having housing levy, which also will form part of the pay audits. I hope you're able to understand, and I hope you're going to make the correct changes. So the takeaways for this: have the director do the pay as you earn. If you have cash flows, do proper documentation. If you have allowances, make sure that the allowances are charged for taxes correctly. Make sure that the staff cost on your audit report is the exact staff cost on your pay returns. Guess I've done a lot of explanation on that. Let's talk about VAT triggers. So what are some of the VAT triggers when it comes to the tax audit? The first one and the greatest one is the turnovers per year on the VAT differs from the turnover per annual audit report. So the VAT that you do on a monthly basis, this is the VAT for January, for the 12 months, should equate that sales that we do, that sales and the purchases that you do should equate to the turnover at the end of the year. So I hope by now, because I've been talking about this thing, you've been able to incorporate. So the auditor who is doing audit and filing should do a VAT analysis for the whole year, 2023. That's what we were doing, 2023. Before they look at your sales ledgers and before they look at your bank statement, what did you file for VAT? So if you filed for VAT 50 million the whole year, and they find that the sales ledger has 10 million, I've remembered what I wanted to talk about on the sales ledger when it comes to the bookkeeping. And I'll mention it at this level. When we do sales reconciliation, sales ledger reconciliation? You can tell me on your chat, on our chat, sales ledger reconciliation. So we keep selling on a monthly basis. At one day, for instance, today, the system that you are using, possibly QuickBooks or any ERP, you do a mistake on that sales. So the customer says you generated an invoice of 500,000. The customer rejected it or amended. Some of us, you come back and generate another invoice. The one that is on the system is still pending. So at the end of the year, when we come to audit, we find that the sales ledger has 60 million and the VAT return has 50 million, and you cannot explain the difference where it's coming from. So at the end of the year, when we are closing the month, do we do reconciliations to see, did we raise an invoice that required a credit note? Did we raise that credit note? So is the sales correct sales? Remember now, when KRA will come and ask for that sales ledger, and some of those sales ledger, we find that there are so many differences that have been happening, but because we've not been careful to do those changes and nobody supervises how we do them, so we find that the sales ledger is so messed up, and if we give it to KRA, it acts as a very huge trigger actually to show that you've not been able to do the correct books. So sales ledger reconciliations on your books, and closing the year. So when we close the year, how do we close the year 2023, and then we start 2024 books on our systems? So turnover, VAT has to align with the turnover of the annual audited accounts. And that is a huge trigger. That's actually one of the biggest triggers that triggers a return review, compliance check. And KRA will always state there that the VAT was 5 million and the turnover is 6 million. So they want to know what is the difference of that. And if you have items that are not vatable, because that's also something that we say, we will have items that are not vatable. The VAT return allows, it has a 3 segmentation, it has a standard rated, the 0 rated, and the exempt. So if you have items that are exempted, make sure that you file the return correctly when you're doing VAT. So for us, when we are doing VAT, when we want to come and do your audit report, when we do the VAT analysis and we find that there is a gap, we always come back and do an amendment on your VAT return before we do the audited report to make sure that everything aligns. We have the VAT refunds claim. The moment you request for a refund, it becomes a trigger. So you have to be audited. They want to verify those refunds. Failure to remit VAT, the same way I said, failure to file, to register for VAT, to make payments, those are triggers. Consistently filing VAT return late. So you actually do a nil, then you do an amendment. Those are triggers. Failure to account for withholding VAT when a company is in a VAT refund position. Okay, I think that one we went overboard. Failure to account for withholding VAT. Let's start there. So when you get a withholding certificate, how do you account for that withholding VAT? So some of us are just having VAT. Remember, when you get that certificate, it is stated the invoice number, the company, the amount. When you come in to do your sales, you have to do those specifications. So don't lump your sales. You're getting VAT withholding certificate, yet you're lumping your sales on the other side. That acts as a trigger. So come on the other side on your sales and declare the actual invoice that you received and the actual money. Input VAT claims by customer or clients. So when you give your customers the eTIMS invoices, how they claim, and this I've experienced this in the last 2 or 3 years. So sometimes, especially when we are using the old ETR, this is what we would do. We would give out ETRs, but when we came to filing, we file low amounts. So the customer details is used to see what we are doing. So also for us, and I know some of you do that you're issuing out items, but when you come to file, because you cannot pay the VAT amount, you start lowering, you lower your sales, or you start, those act as triggers, because the information, the data is already with your customers and already they have filed on their side. Failure to maintain a VAT control account, failure to filing nil return. So some of us file nil return, yet we have the VAT, we have the sales. Consistently VAT credit position. So if you're always on a credit position, and I guess I've seen this in the last like 3 months, KRA wants to check your credit position. If you're always on a credit position, they want to understand the nature of the business. Non-compliance with actions such as failure to use ETR or ETIMS, failure to use the ETIMS is a trigger. And also we have the industrial audits. So when it comes to how we are using VAT and ETIMS, it is very, very important to understand the filing. We also understand the sales, how we are doing our sales, and remember the ETIMS software we are using is also a game changer. So you cannot purchase, and I mentioned that you cannot purchase and yet you're not selling. So you have to make sure that everything is able to align. And when I talked about ETIMS, I talked about when we were demonstrating how we're using ETIMS, I showed you that when you buy with ETIMS, when you buy something or purchase, and the customer, the supplier is able to incorporate your PIN. Remember, we are also having the VAT auto assessment. We are having the VAT auto assessment. So when the client, when you give out your PIN, when you come to the ETIMS machine that you're having, you can go to your purchases. It has a purchases management system. When you go there, you find that purchase in your system. And when you accept that purchase, it goes to your stocks. So it is a very efficient system that is supposed to push our compliance levels when it comes to how we do business. So let's continue with the tax triggers. And this time we are talking about income tax. Failure to register, to separate sources of income, taxable income, where a company has more than one source of taxable income, especially the audit, the income tax return is segmented. It has the business income, rental income, interest income. Make sure that you are able to segment. So if your company is also having rental income, make sure that you do a rental income under that portal, so that you're able to declare. If you may find that the rental business had profits, the other business income had a loss, but when you merge, they become a loss. So during audit, you find that KRA want to separate and make sure that one makes a profit and pay the correct taxes. Variances between annual VAT return turnover and annual audited accounts turnover I've mentioned here when I was talking about VAT, and it works the same. So for VAT, if the VAT is 5 million and the turnover at the end of the year, what the auditor filed was 6 million, it means there was a 1 million that was not charged for VAT. So they would do 1 million multiplied by 16%. But also we can have that the VAT was 6 million, but the turnover that the auditor declared was 5 million. So the difference of 1 million is going to be chargeable for corporation tax at 30%. So I hope that is clear. So both sides, whatever is higher, one will be charged for VAT, the other one will be charged for corporation tax. Reporting income tax losses. So if you're always reporting for a loss, you've been on a loss position 5 years, 6 years, 7 years, it becomes a trigger. Deductible expenses that do not match specific business expenses. So if you're selling water, as I had mentioned, and you have repairs, maintenance, that is too high. What is this that you did? So you may find that the organization, especially organizations that have rental income, they have renovations, repairs as expenses, but they cannot show incomes on that. So make sure that you're able to match your expenses. Reputation of the organization, of capital, of company tax service providers. So tax auditors, mostly this happens at a very huge scale. Gross profit margin variances compared to industrial average. So this mostly, I find it happening at the medium taxpayers level. So if your company is making huge turnovers, KRA want to make sure that the profit margin is able to match the industrial average. So if you're in a wholesale business and you're, for instance, you're doing margins of 3%, 1%, 2%, they will come and tell you, in this business, you have to declare margins of 5%. So they will take your turnover, and because of that, they will demonstrate their gross margins. I've seen this happening at the medium taxpayers office and a large taxpayers office. So when they show you the margins and your company is able, for instance, to make the sales was 200 million, they are going to do, if the 5% was supposed to be now the average, they're going to do 5% of that sales. They do 5%, then the money they are going to see at the profits, then they do the 30%. So make sure that you're able to fit in the industrial average, especially when your business is doing high turnovers. Unexpected losses in audits. I guess I've talked about audits. Information from other tax audits. So if one company is being audited, one sister company is being audited, you find that the other company, sister company, want to be audited. So if you're auditing one company and you find that this one company is selling to another distributor, so you find when the distributor company is being audited, the other company will be audited, either sister company or a company that had been given a contract. So they want to go back and audit the other company. So one company can, information from one company can trigger audit in another company. Other triggers are IFMIS system by the government. If you're paid through IFMIS by company, if you supplied or you did a tender through the parastatus county government and you paid through IFMIS, make sure that you able to do correct taxes for that amount. IFMIS is used to audit companies. So you find KRA, get the IFMIS data. When they get that data, they want to see your audit reports. And with IFMIS, they are able to find even the bank account that was used the exact date when the money was received. So they have very concrete information about your organization. Third-party information. So this is information from your supplier, from your customer, from a competitor. KRA can act on that information. Media attention. If your company gets media attention, we talked about visibility. Make sure that also your books are in order. It also acts as a trigger. Current or former employee giving information about the company. So sometimes we have those tax avoidance, tax evasions, and possibly there's something and the employees are able to report you to KRA. So those are some of the triggers that we have. The other triggers I've talked about: non-filing, continuous losses, industrial trends. I've talked about business restructuring. So if you're restructuring your business, you're merging businesses together, and you're closing one PIN. Any letter that you write to KRA acts as a trigger. Some of us write letters that we want to close a company, or that's a trigger. So any business restructuring, you want to close a PIN, an obligation, you are merging organizations, those are triggers. Media attention, intercompany transaction I've mentioned. So those are triggers. I want to talk about audit process. So after I talk about audit process, we're going to talk about the tax dispute resolution, and then we call it a day. So before I talk about that, let me see who is here, who has a question. So someone is asking, why can't tax audits be done annually? For many reasons, and one of the biggest reasons is that KRA doesn't have capacity for that. They don't have capacity. We are so many companies in Kenya. So the moment they come to you, they want to audit for 5 years, or the years that you've not been audited. They don't have capacity for that. So directors, thoroughly, I say the directors form part of the employees of the organization. If they are fully there, that is their core business, make sure that you do pay as you earn for their fees, and make sure that you're there. Someone says you did not discuss transfer pricing audits. Thank you. So we guess we can incorporate that on the triggers. So if you have an organization, and this organization is a sister company to a foreign organization, or there's a transaction that you're doing together. For instance, the organization is selling flowers. You have a sister company in Netherlands. So, and this other company is here. So you are producing flowers for them. There is the transfer pricing or audits. So KRA, when they come, they want to see the transfer pricing policy. And they want to see, are you transferring profits? Are you making losses in Kenyan company, whereas the mother country is making very huge supernatural profits? So they want to see, how are your terms of engagement? Are you selling that flower at a market rate? If you're getting loans from the sister company, are they, when you bring in them, are they at the market level and market rates? Management fees, any management fees that you're having, any withholding, any association that you're doing with the other company outside Kenya, what is the terms and conditions to make sure that the company, the local company, is able to make profits and is able to pay taxes? So those are triggers. Thank you, Amos, for that. When was housing levy filing due? We started doing it last year. So make sure that you're able to do it for all your staff. So I hope you're having staff. And this year, I also have talked about also being done by the landlords and being done by the small businesses who are doing turnover tax. So make sure that you're able to do that. What happens if the cash flows are a problem and do not pay actual salaries and give advances, file minimum amounts? So at the end of the year, you have salary accrued. Okay. So James, that is a trigger. It's a trigger in waiting. So you pay advance, you did not pay as you earn correctly. So possibly you can talk to us and we can have a more personalized talk about how you're doing it, and we can advise better. The capacity they have hired many staff, they should just audit 1 year. Okay, Claire. So directors' fees, directors' fee are chargeable for taxes. So others, there are some who give directors fees on a monthly basis, others quarterly, others yearly. Just make sure that you do the correct taxes on that. Okay. So I can see some have been mentioned. Have been answered. So we're going to get advice on other supporting document for casuals. So I mentioned for casuals, you're supposed to have a casual wages sheet and make sure they sign. Make sure they sign. Make sure they sign. You have details, name, ID number for number, the day they came in, how much they were paid, and then let them sign. Very, very important. And the casuals also include people who are doing loading, offloading, any single coin that gets out of the company, make sure that you have correct documentation. If you have somebody border who came, you sent them somewhere, you came back, you paid them 500 shillings, do a petty cash voucher and let them sign. So let's go back to audit process. So let's talk about the audit process and what happens before audit. So we've talked about triggers, what are audit. Now you have received the actual letter for audit. What should happen prior to the audit? The first, involve a tax consultant before to analyze your system. And before you do that, obtain an official letter from KRA with a list of information required. So I know you receive an email, they give you 7 days, and you can ask. I said, agree with the KRA on time frame. The time frame, you can request for additional time. You can say the 7 days are very, we cannot be able to finalize. We are, and you can specify you are doing, what are you doing? It's at the end of the month, we are so tight, and just explain, and then request for 7 more days, 14 more days, and to provide that information. You can also look at the information that you have. Most of the time, they will ask for audited reports, and already you have them. So you can share that as you also wait to share the rest of the information. So you can do gradual sharing of the information, but make sure that you are able to respond within those 7 days and ask for that additional information, or say, I can be able to provide this for now, but within the next 14 days, I can provide this and this and this. And before you start provision of documentation, have the tax consultant able to analyze that information. That is one of the issues that I've seen. It is very important the data that you give them is correct data, so that we don't also, if you've been demanded 10 million, we don't also provide information, then we now demanded 15 million. So make sure that the tax consultant is able to analyze your data, is able to analyze the system, the general ledgers and the sales ledger. Before you provide them, they've been analyzed. So for us, we'll be able to look at the data and be able to frame the data correctly. Prepare the relevant information, agree on time frame, and inform staff to avoid any surprises. So sometimes it's very important to make sure that the staff are aware of what is happening, so that in case of any query, they can be able to answer the question correctly. What happens during audit? So that is prior. We've checked the information. We have now this is the time that now they are looking at that data. What happens? Invite your tax advisor for their opening meeting. So most of the time, if you've not been audited before, there's always an opening meeting. They want to understand about the organization. They ask you, how many years have you been in operation? How many staff do you have? Who are the directors? What do you do? Remember that the tax officer, the accounts manager, has 1,000 companies, so they cannot be able, even if you written Regina Feeds, Animal Feeds organization, they cannot assume that you're selling animal feeds. They want to hear and they want to see those data. So that opening meeting is very important. Of course, giving the correct information. How many employees do you have? So you can remember what you've been filing. So you have to give that information with what you've been filing. And of course, they can also verify with the filing that is there. Appoint a contact person to avoid many people dealing with KRA. It's very, very important, because we have, with this, you have consistency of information provided. So it gives consistency. So not one time that this person went there, they were explaining this is what we are supposed to happen, give us this is this. Then someone else went there, then they give a different information, then they are explained. So make sure that the person is consistent. Senior most people to avoid dealing with KRA until last stages. I always recommend that, because the early stages are stages of document provision, understanding the organization, looking at the data. So at that particular point, you can allow the accountant, the tax advisor, to handle that portion until it's fully complete, when now the directors can come in. Document information provided to KRA, and date provided and date returned. Sometimes KRA will ask for original information files. Make sure that you sign. There's a document they give you to sign. Make sure that you get that document and sign it, because you can lose that data. And that data is very vital for the organization. So if you lose that data, you're going to not win that case. So make sure that you get that. And remember, KRA also reshuffles. They do a reshuffle of employees. So you find that the accounts manager keep changing. So if that person who you gave documents is reshuffled to go to wherever, why are your documents safe? And can you get your documents and find them? So it's important. Cooperate during the entire process. So some of you, when you're called, you don't answer calls, because our phones have Truecaller. When you just see KRA, you can't pick that call. When they write an email, you don't respond. When they come, the watchman says that the company is not operating. So lack of cooperation is one of the key mistakes for us not able to solve tax issues. And KRA is able to document cooperation. So if you pick that phone and you talked very badly and you answered a question incorrectly, they can document that on the file. So make sure that you're able to cooperate, you are able to respond, not in anger, and answer the question provided. If you're unable to answer the question, you can ask for more time, or you can ask for the correct person who is able to answer the question. So if you're an accountant and being asked question that you don't understand, that the director only understands, say, I think that question, let's keep it for our director. Avoid off-the-cuff questions. And this is the reason why, as tax advisors, we handle these queries, because KRA will always ask those off-the-cuff questions, like possibly when they come, they will ask other questions that you may not think they are necessary, but they are necessary for the information. Questions like which one? So they possibly they'll pose a question like, I have relocated to this area and I'm looking for a house. And you now start giving examples of areas where now this is lunchtime or during tea break where you're having a cup of tea. And you say, oh, you can go to this and this and this place. They are nice. And the houses cost this and this and this. And you say, there's like, oh, that's where you live. And you say, yes. So the question, they were not looking for a house. They were looking to understand the standard of living for you. So and the moment they understand the standard of living, they understand the salary that you're getting, and they also understand the company is making losses, yet the staff or the director are able to afford living there. So those are some of the questions. And that's why sometimes I prefer the entire process being handled by the tax advisor. Invite your advisors to the exit meeting. So consult the tax advisor on queries that you're not sure of. Don't just answer questions, just you can pose and ask. Invite your advisors to the exit meeting. Make sure that they are there so that at that particular point you have findings. You have discussed the findings, you have provided more information to reduce on the amount, so you are in agreement. So involve them at that particular point, because they are the people that are going to help in finalizing of the entire process and making sure that you have letters that show the assessment, that show the audit. It is very important for you to get that letter. Resolve as many issues as possible before completion of the audit. I'm going to talk about the tax dispute. It is very cumbersome. So make sure at the audit level you are able to handle those queries. What happens after the audit? Follow-ups with KRA to issue an official letter confirming position. So get that letter. If you don't get that letter, next year somebody will come to audit you, and they will even audit those years because you have no letter to show that I was audited. So sometimes some of us go and negotiate, and you meet Nyuma Hema and you finalize, but you don't get that letter. So that is a very huge mistake, because you'll be audited. The entire audit will be repeated because you didn't get that letter. Involve your tax advisor, even at this stage. Pay any taxes that are not in dispute. So if KRA raised on your official letter, they did an assessment of 3 million, and you felt and you have concrete reasons and concrete information that 3 million should have been 1 million, make sure you pay the 1 million that is not in dispute as you seek dispute, as you seek the dispute resolution. Respond to KRA on timely basis. Any time. Anytime that you're doing this, make sure that you're able to handle handle the information on time basis. So I want to talk about dispute. And before I do that, let me talk about some of the mistakes that happens during the entire process. So these are some of the mistakes. Panic. So when we get that letter, we panic. When we panic, we call or we go to KRA with anger. And I said they document this process. So some of us talk very badly. They document that, and they make the entire process very, very hard because we did not cooperate. Not consulting a tax advisor is a very huge mistake. Assuming the letters of audit, not conducting a tax risk assessment before audit, I'll talk about that. Side shows and canvassing. Side shows is where we say, oh, I know who, I'll go to Nairobi, or I go where, or I know commissioner. Those things makes the case go on the negative side. So comply with the people that are asking you questions without saying who you know. Canvassing, this is where we meet in Hema. And there is, when we block audit, because some of you block audit, the moment you canvass and block audit, first of all, if you're doing mistakes on your books, you continue doing that mistake. So compliance also help you understand how the mistakes that you've been doing and solve them. And also you get letters of audit so that you know, for instance, if you know that have been audited until 2022, you know that nobody will come back and ask you for questions. It's only 2023 that have not been audited. And 2023, because you know you underwent an audit and you know the mistakes, 2023, you did not do any mistake on your tax compliance. So audit also helps the organization become audit compliant, tax compliant. So don't convince, don't block it. And because even if you block it, there will come a time that you'll not be able to do that. And you'll be audited and so many taxes will be raised. So role of a tax advisor, conduct a periodic tax compliance checks. And that's what we do. So you might not be having tax issues or audit issues, but do periodic tax health checks. And you're going to give that for free. So my co-host, you can do a booking. So you can book and we're going to do it for free. And I'm going to explain what we shall do. So just conduct and just align your books properly. They interpret changes in taxes. They conduct a tax risk assessment prior audit. And this is what I wanted to explain. So when KRA comes and gives you a letter, when we come in prior to us giving them any information, we do a risk assessment. We look at your sales ledger. We look at your books. We say, according to us, this is the mistakes that you've been doing. This is the taxes due. This is the area, because we need to understand that position, because KRA will come back when we provide that information to them. We need to bridge the gaps. If you don't have correct documentation, for instance, we have to tell you, provide this documentation. So if you do not have payrolls, we guide you on how to do the payrolls. If you did not do petty cash correctly, we guide you on that, so that we make sure that the documentation they are requesting is at par. So that is how we help you win that case. So we do the tax risk assessment and we bridge the gaps. Being available during audit, so we become available the entire process, and we can even handle the entire process ourselves. Ensure a successful closure of the audit with fair assessments or zero assessment, depending on the nature of the business, of course. Help resolve any tax in dispute. I'm going to talk about that. Tax training to enhance operations. When were you trained for tax? To make sure that, because we say the filing we do on a monthly basis are the triggers, what we do act as triggers. So understanding tax is very important, and that's why we are having the tax master classes. So make sure that you also learn, and we also help you do tax planning so that you can become tax compliant. So that is the role of a tax advisor, where we just come in and bridge the gap. Let me talk about tax disputes. So we've been audited. What are some of the KRA ongoing audits? Return review, I've mentioned. Rental assessment, KRA is moving to just make sure that our rentals, especially the monthly rentals, are done. VAT credits, if you're always on a credit position, you'll be audited very soon. Comparison between turnover and VAT, I've mentioned that is one of the biggest trigger. Advanced taxes. So are you having motor vehicle and you're not paying for advanced taxes? Import, export information. Are you importing and exporting? So make sure that, because they get that data from IFMIS, from Simba system and the audit organization. IFMIS rental audits based on KPLC water meter information, nil filers, non-filers, pay, I've talked about pay, tax investigation on evasion, double claimed invoices. This happened, I guess, 2 or 3 years ago. So those double claimed, especially for VAT, double claimed invoices, where some of you, knowingly or unknowingly, you are using one invoice so many times. So through the data intelligence, KRA is able to get that information and audit you. Under declaration of sales, so you are issuing ITIMs invoices, yet you're not declaring. So those data, of course, I also mentioned here that we'll be having a lot of ITIMs audits on how we are using ITIMs compliance, ITIMs compliance audits, and stocks, how we are using stocks and everything. We also have legacy data. I guess I didn't mention that here. Legacy data. So if you check your system, some of you I know have received those emails, KRA saying that they have given you a legacy data. So this is data prior to inception of iTax. We had a system that was called legacy. It had arrears. So they have incorporated those arrears in our iTax portal. I guess they did that this month or last month. So they want you to handle that audits. And some of those audits are the audits that we are helping you solve. So you can talk to us. Tax dispute. So you've been audited, you've been raised an assessment, and that assessment is not fair according to you. So what happens after that? How can you get a hearing until you get a fair assessment? So there are channels that you can go. So that audit, that demand is not final. Sometimes KRA acts like this is the only, you're supposed to pay this. No, there are channels on how you can dispute. So when the assessment is issued, you can do an objection within 30 days. So do the objection within 30 days. And this process, I really recommend being done by a tax advisor. So you can also talk to us on this process, because this is a very vigorous process. Remember, this process has a number of days. The audit process doesn't have days. You can be audited from January to December. KRA just keep calling you, give us this data. Then they stay for a month. They say, give us bank statement. Then they stay, give us this. So it doesn't have a time frame. But objection and all the others have time frames. So you need to be extremely active to be able to handle that case. And this dispute is sometimes cumbersome. So make sure that you're able to handle the issues at the tax level before you come to the dispute. So do an objection within 30 days. The objection should be, the decision for objection should be done within 60 days. So within the moment you raise that objection, within 30 days, KRA will most probably within a week respond to that and ask you for the additional documents, and you start doing representation. This is a representation that should be physical. And this is on data, on extra data that was not handled at the station level or at the audit level. So what extra information that you're having? And remember, KRA, at the objection level, will also contact officers who audited you and ask, what was the parameters for this audit? Why did you raise 10 million? And they were going to give reasons. And then you're going to give your reasons plus evidence. So the good thing with the objection is that you find an entirely new team. So the team that was auditing you is not the team that is handling the objection. So you can be able to place your case and you can be able to be heard. After 60 days, they can agree or they can disagree, or they can agree on some amounts. Depending on what they do, if you feel aggrieved, you can still go to the tribunal. So the tribunal, you're supposed to now apply for tribunal within the 30 days after receiving the decision. 30 days. And this, at the tribunal level, there's a lot of data provided. We do a lot of data provided at that level. And at that level, you can also request to go to the ADR. So for us, when we look at the case and we see that the case can be better, be resolved at the ADR level, we can be able to advise the client and request for that ADR meeting. The cases at the ADR, mostly they are not technical. So we can be able to judge a case and say, if we go to the ADR, we can get better results. So depending on the nature of the case. And if we were handling the case at the station level, we can be able to judge the case and tell you, even if we go to the tribunal, to the objection, to the tribunal, to the ADR, we will not have changes. So there's no need of going that level. So for instance, I'll give an example. This is how the flow happens. Taxpayers object the demand, then the KRA can accept, and the number of days. I'm going to provide you this information. Let me give an example of a case. So we handle a case, the case KRA raises $1 billion. So KRA can be crazy, and with my experience of 10 years, when KRA wants to raise 100,000, when they want to raise 10 million from you, they'll give you a demand of 50 million or 100 million. So it's always overstated by so much. Sometimes I think to just care and make sure that we are able to act very fast. So at the level where we are doing data, we are providing information. We provide the information until that demand, or possibly they don't even demand anything. They just saying, provide us data. That by the time they are giving you findings, they give you finding at 50 million. So we further provide information. That time we are just doing audit. We further provide information until a certain level. So possibly they go to 30 million and they say we at a final level and we are going to do that assessment. So for this particular thing that I'm talking about, the issue that was there was the provision of what? Tax exemption certificate. So the client was operating a project that was tax exempted, but there was no provision of tax exemption certificate. So at the station level, or at that level, the level that the audit is being handled, they say that they have to assess the VAT, because even if the project was VAT, the VAT exempted, there was no exemption certificate, and they handle it at that point, and they charge 300 million because of that. When we go to the objection level, they use the law. If for this project to be VAT exempted, what was supposed to be provided? So they look, because remember the services provided, they are according to the VAT schedule, they are vatable. So for them to be exempted, the certificate has to be that. The terms are clear. So at the objection level, they look at it and they use the law, and they say the 300 million has to be paid. So this is a case that you can push to the tribunal and push to the ADR, because at the ADR, you can look at the facts. And the facts would mean, was the certificate, was was the need for that certificate raised? Did this company go to Treasury, look for the certificate? So they will provide data and letters and say, in January, we went to the Treasury to ask for this certificate. This was the response that was provided. So you find this company has so many respondents on this certificate, but they did not get the actual certificate. So the ADR can act on this many response letters and agree that the project was supposed to be exempted and agree to waive that 300 million. So for us, we can be able to advise that if we can go here or there, or if we can win. So I think that was what I had for today. I can see some cases here. I don't know if I have time to just look at one. So when most of these tax cases, you can see them on Business Daily. They're always there. So especially the resolving at the tribunal or at the ADR, it's always published. And the moment it's published, it also acts as a precedent. So if you're having a case and possibly KRA is asking for a withholding, you did not do this withholding. And when we look at the act, for sure, that is true. But if there was a case in the tribunal or at the ADR that was determined in your favor, we can use it and say, the act could be saying this, but this case was determined. And because it was determined in our favor, we can use that case as a precedent. So it also calls for a lot of work, especially to make sure that you win. So let me handle some few questions. I can see it's already 12. Let me just look at your few questions. So ADR means alternative dispute resolution. Thank you for that. How do you push for a private ruling? Oh my goodness. So the company is, every company is ruling on tax issues is done differently. So we could be having same challenges, but we get different results. So depending on who was able to represent you, their representation skills, their negotiation skills, and of course the books provided, the reasons for what you are doing. So you may find that these are two organizations, two similar organizations, and you find that the determinant are different. So when it comes to tax dispute, I believe getting the correct person for that is extremely important. Kindly share the notes. You're going to share the notes. So there was a link. For you to fill in. When you fill in, we can be able to share the notes. You're going to share the notes immediately. So you can also do a calendar booking if you have a personalized question. Some of us have so many questions. You can talk to us, and the calendar booking is free of charge. We're going to answer that personalized question, and we make sure that you get the correct way of doing what you're doing. You can also do a tax health check. Let me see, it was provided here. I guess we did not provide that. We did not provide that. But when we do the tax health check, so you can talk to us on our number or on the calendar booking and define that you want the tax health check. When we come in, we look at the previous 2 years, all the taxes, we look at how you keep the books. If you have a tax case or a tax issue, we are able to help you on how to solve it. And that one, we just give it free of charge. We also having a taxation masterclass. This is ongoing. So we're going to release the taxation masterclass. We have one final taxation masterclass for this year. We're also having bookkeeping and we have audit. We have 3. We're going to just release them, the 3 of them, together with the specific dates. Just come and learn. Just come and learn. The more you learn, the more you're able to keep your books in order, keep your organization in order, so that during such issues, you are able to solve them. One of the reasons why we do this tax training free of charge, because some of you ask, why do you do this? And I've always had these questions. I realize in the years that I've done tax representation, because that is mostly what I've done personally. So our company is an audit company. We do audit tax advisory, but I do a lot of representation. I realize that most of the mistakes that we do in tax are mistakes of lack of knowledge and things we repeatedly do. If somebody was able to advise us correctly, we could have solved those issues. And we find that those little mistakes, they make us lose a lot of taxes and a lot of money. So that is the reason why we particularly do this training. So we do the tax audits and we do tax services. So if you're having a challenge with audit, KRA audit, you can also talk to us and we can help you. We'll make sure that you win that case soon as possible. Bookkeeping. So we also help you do bookkeeping. So if your organization and you're feeling overwhelmed, you can outsource us for bookkeeping. And of course, when you do the correct bookkeeping, we said you're also able in a position to win your taxes. We also do internal controls, internal audits, especially now. We can help you set up your internal control processes, manage, do your payroll, just put your organization in order to just make sure that you have a very correct flow. So if you'd want all these services, you can talk to us on the numbers provided. We are in Nairobi, Westlands, and we also in Thika, and we can come at your location. If you also need personalized trainings in all areas, the areas could be audit, tax, advisory, bookkeeping, we can also do that. If you have a team in your office, we can personalize and train them. We can personalize and train them. You can also come for training, for the training that we're doing. They are very friendly. They are very good. We are doing it in the evening. You get in a community. People ask questions. We do it very practical. So you are able to really get much, much more. And we also give you certifications where you can use to get your CPD hours. So with that, I'm going to share the notes with you. So let me also answer one more question. So kindly share your email address. So my co-host, you can share my email address to Moffat. Yeah, we are going to share the notes. I'm going to share the notes. So kindly remember to register the attendance. That is where when you register the attendance, you get the notes. So Derek, you can, someone is asking full time. So Derek, someone will come to you, will answer that question. One more. So someone is asking, did you get the nomination? That is Matthew. Matthew, I know you're asking because you did nominate. Thank you so much for doing it. I didn't get, but I'm hoping next year I'll get it. That was the 40 under 40. Thank you so much for that. So I'll be working. I have a full year to work on it and work on branding and so many other. So I'll come back to you, Matthew, to ask you to nominate me again. But thank you so much for that. So with that, I say thank you. Thank you for coming to learn. Always come to learn. Every month we release something new. Come to learn about our tax trends. We always have something very, very important to share. We always have important information to share. Very, very important. Just come and learn. The sector-based audits, very important. And of course, the training that we do today that is on a topic. Do you offer internship? Yes, we do. You can apply on our email. So for that, who is asking for my email? Let me just put it here. So it's Regina at LWK Associates. .co.ke. So the number, the office line was also shared, 0728. When you call, you can also request to talk to me. I'll still be able to answer. So with that, I say thank you so much for coming this Friday. I'm always so excited when I'm training, especially on audits. It's a very important topic because this is one of the topics that I've seen organization close business because of audits. So when I'm training about it, I'm very passionate about it to make sure that your business is going concern. So nobody will knock on your door and you just collapse. And some organizations, you operate for 5 years, then you close that one. And then have you ever seen those organizations that they're always a new name? They operate 3 years, the other year, someone is just, they operate for 3 years and then 4th year, they just say, we changed our PIN. So how can your organization be able to grow and be able to be tax compliant? Because there are organizations that have been there for many, many, many years. How do they handle? And of course, as the organization grows, there's also tax exemptions, tax incentives. How can you also enjoy that? So when we are doing tax planning, we also do that. We also do that and see how you can also benefit with tax incentives and remissions. So God bless you. Have a lovely afternoon.